Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and it's the earnings special show that we are doing right here. And Mahindra Logistics is the company that we are focused on. The Q1 numbers got released on Friday. And what we've come to know is that the company has reported a four-fold increase in the consolidated profit after tax to 13.64 crore rupees for the first quarter ended June 30th. And that was on the back of higher revenues. Now to talk about more detailed fine print of the earnings, I have with me a very special guest joining in. The management of the company really joins in. Mr. Rampraveen Swaminathan joins in from Mahindra Logistics. He's the MD and the CEO. Welcome to Business Today TV, and thank you so much for taking the time out, sir. Just help all our viewers first understand the big breakup of the earnings, the key fine prints that we can really understand.
Good morning. So obviously, I think we had a strong quarter driven by both revenue and execution of our strategic platforms. Revenue was overall up 36%, led by growth across the supply chain business. I think it was also up 10 to 12% sequentially, which was important given that last year Q1 had some COVID impact. We also saw a good bounce back on the mobility business, which still is lower than historical numbers, but grew by nearly 50% year on year. Right, so revenue growth was pretty strong. Most of it was volume driven. There was very little price in that. Obviously, EBITDA was up nearly 60%, and obviously we saw some strong growth at a profitability level as well. The quarter obviously saw 4x growth on a consolidated basis, including subsidiaries, but excluding even the consolidation of Meru, the acquisition we closed in Q1. The profits are up nearly 60% at a PAT level.
Okay,
so
understood.
Overall, a good quarter on multiple dimensions.
Right. Now, when we look forward, the entire FY23, how is that really looking for you? And what are going to be the key growth drivers, the segments that you'll be key focused on?
Yeah, so if you look at our 3PL business, which is the bulk of our supply chain business, I think there, obviously, we've on the automotive side sector is in a phase of recovery for us. The OEMs which we play with are largely SUV manufacturers and companies at high end of the market. Demand there is still pretty solid, and I think as the supply chain bottlenecks start getting further resolved, we believe that we will see some growth there. Which is really a correction of 3 years in some ways, right? On the non-automotive side, that's been a part of our business which has been growing consistently, at an mid-20s level for the better part of the last 3 years. We expect to be able to sustain that kind of growth as we look out, right, on a full year basis. Some of our smaller businesses like freight forwarding, B2B express, last mile delivery, those are also seeing some pretty robust growth trends. There are, of course, headwinds and uncertainties from a macro perspective, but at this stage, I think we expect a kind of sustained momentum in the second quarter, and we're hoping that this is the first big festive season after 2 years of the COVID impact. So we hope that will actually be positive as well.
Right. Also help us understand your view on the farm segment, if that is also seen a recovery, and especially with the monsoons coming in normal this time around as well. Is there an added on fillip that you expect going forward?
No, so farm's grown really well over the last couple of years, and Q4 last year was a bit of a blip, but it has come back in Q1, as you know, right? And I think a couple of things. Obviously, we'll see how monsoons play out, but also just better ag prices or product prices, I think, means that there's more money going into the hands of farmers, and therefore that should obviously help growth as well. At the same time, you don't buy tractors every year, right? It's not a Diwali purchase. So I think in that sense, how much, we can't just assume that growth will translate into volume. But overall, the first quarter was good, and I expect a good year in farm here, listening to what our customers are telling us.
Right. What about the home business? Has that seen an improvement with people coming back to work, post-COVID? This essentially has been a quarter when most of the companies have begun more hybrid and more work from office kind of a culture again. So how has that panned out for you?
Yeah, so I'd say mobility overall has started seeing that recovery, right? I think the Meru business on a trip count level is up nearly 50%, which is largely driven by travel, and travel is obviously pretty much back, I'd say, across the board. The back to work syndrome, I think, has started. Obviously, but it is still, we are up around 30% from a trip count basis, actually. So volumes are up. It's still off substantially from its peak. Because, as you know, most people are coming in in a hybrid model. People are coming for a couple of days a week. They're not necessarily coming in all week. So there is some distance to go there, but tailwinds are generally positive. I think we are expecting that hopefully will sustain over the rest of this year.
Right. So could you share with us an outlook on growth and profitability for FY23?
We generally don't give outlooks, but I think we closed last year around 4,100 crores, and we expect good growth this year. As I said, I think from a revenue perspective, a lot of the tailwinds you have seen in the first quarter should by and large sustain themselves through the year, right? We may not see the same year-on-year growth because last year Q1 was COVID impacted, but we do expect that we will see across the board revenue growth, and hopefully, despite a volatile cost environment, most of that, if we execute our ops well, most of that should have a strong impact on the bottom line as well.
Right. Any thoughts on the margins and market share right now, what the picture is looking like, and what do you really see how it unfolds?
Well, I think, as you know, the logistics industry is pretty large and it's a very fragmented business. So it's hard to actually, I think market shares are a bit, kind of illusionary in the space. But the 3PL business where we largely play, I think there we have around 4.5% to 5% market share as per our estimate. We expect to be able to consolidate and grow that further. The enterprise mobility part of our business, we've been a market leader for several years. So I think as that comes back, again, we hope to be able to retain that. Through COVID, we have retained our share, even though the pie has got smaller. And we're hoping that, the Meru business will gain share as we invest more in synergies and revenue growth.
Right. Also, any other acquisitions that you may be on the lookout for in FY23?
No, nothing to comment at this stage.
Okay. Any fundraise plans at this point in time? Could you give us a debt picture as well?
No, we are pretty much, I think we have a very low debt company. We've generally been zero debt. This quarter, we obviously acquired some debt, but we have generally been very marginal in terms of debt, right? And we have strong ratings both because of the balance sheet of the company as well as the lineage and the parentage of the company. But at this stage, really no plans for nothing I can really share on capital expansion, on fundraisers or on acquisitions, really.
Okay, so any geographical expansions that you may be planning going forward?
Yeah, so I think we did announce a couple of months ago, last month actually, that we are forming two new subsidiaries. One focused on building an air charter business in the Gulf, in the Emirates, and the other one on starting up and a second subsidiary in the UK to start off with freight forwarding services there. So those are critical levers for growth for our forwarding business, and hopefully may set the beachhead for other lines of businesses as well, right? And that those expansion businesses should be set up and operational by the end of this fiscal year.
Okay. Also, could you help us understand, just for the knowledge of all our viewers as well, the revenue mix currently with domestic and internationally, how is that placed? And is that going to be something that one should watch out for?
We are almost completely domestic. I mean, while we do the forwarding cross-border movement is around 10 to 10% of our revenue, all of that's essentially business booked in country in India, right? And so in that sense, we're almost completely a domestic business. With these expansions, hopefully that will go up. But our key focus always is trying to build a good value proposition, ensure that we have a good value proposition, build a good team, invest in technology. And if you do the right things that you're offering, then hopefully demand and margins will come.
Okay, I understood that. Well, thank you so much, Mr. Swaminathan, for being with us on the show and sharing with us all the insights from Q1. Here's wishing you all the best for the future quarters as well.
Thank you very much.
Thank you.